Good morning. Welcome to day 31, episode 2 of my small account challenge. So I'm just looking at the scanners this morning, and I was looking at continuation from yesterday, and I noticed that Otis wasn't on it. And I thought that this stock, because it was in the middle of a gap all the way up here, and it was our leading gainer, I thought that this might rally back up at some point during the day. But it looks like it just did a complete round trip, which is not a good sign. It's all the way back down at $4 today, despite having good news and whatnot. So the only thing I can suspect is that either the news isn't as good as we thought it was, or companies selling shares. Because that daily candle has 39 million shares of selling volume now. That's never a good sign. Usually, you want to see stocks that pop up hold up for transitions to a hot market. Otherwise, if they pop up and then they fail, short sellers just continue having a heyday, then we continue seeing a bear market. So that's not a good sign. Today we have a couple things up on the scans, up over 50%. BZFD gapped up after hours. It's a lower price and a higher float. I'm not particularly interested in this, and it's below VWAP right now as well. So that is our leading gainer for today, which is a bit unfortunate. Up 80%. Our second leading gainer is TDIC, which is also a $1 stock at the moment. We're above VWAP here, holding the 20 EMA on the 5-minute, with a daily level above 220. Getting a bit of 7 a.m. volume. Hong Kong company. The news is a memorandum of understanding to explore development, implementation, and deployment of a comprehensive AI-powered intelligent image library platform at 5 a.m. Went from $1 all the way up to 261 earlier in the day, which is pretty impressive, up over 150%. But then it came back down. I'd like to see it get over $2, $2.19 for me to be interested in this. The S&P 500 gapped down today. Unsure why. I haven't been following the news. But I'm sure it's something related to Trump. prices gone up in US oil as well. So the other top 5 leading gainer, or other top 3 leading gainers, HTCO, AMBO, Q, UBT. Not really interested in them. We're just waiting, just chilling out. Curious if changing my open positions to day realized from realized is gonna allow it to stay up there, but let me see. I've been trying to edit my layout a little bit while we're not doing anything. This is I need to use a different tab. So I think we will make this realize positions for now. Problem is I don't have anywhere to put the closed positions tab right now. Unless I remove, I could remove the fundamentals. Try removing the fundamentals for now. I don't think it's necessary. Portfolio, closed positions. I don't need market value. Don't need account type. Don't need that. Need that. Not need that. I don't know what the difference between realized and day realized would be. We will put this on the screen. There. Probably more useful for people than fundamentals, considering I have fundamentals in the stock quote window anyways. Not all of them, but a good portion of them. Whatever matters anyway. Suppose I should add a reference as well. Too big. Good enough. We've got 13 minutes to 7:30. This is the sitting game we all know and love. I'm not going to lower my quality standard just to take trades. Technically, yesterday was a lowering of my quality standard. However, there was a good reason for it. So yesterday ended with a $7 red day. Not a huge red day, not a big deal. But the stock that we traded was an 8 million share float and a price above $10 in a cold market, which I don't usually trade. So that would have been a B quality stock for me. However, the reason why I traded it was because it had a couple of multiplying factors. The first one was that the price that I traded it in at high of day where it was breaking out was in a big gap, which is a multiplying factor. Gaps to windows, blue sky. So it had higher likelihood of working. And also the fact that it was 100%, over 100% on the day at that point. It was a top leading gainer and it was gaining a lot of attention. Even though it was a higher float, it should have had a corresponding amount of volume for price to move because everyone was paying attention to it. It was the only thing moving. So although our quality standard was lowered a little bit to trade it, I still think that it was the right decision to attempt to trade it. But even though I will make exceptions sometimes for stocks that are B quality in this market, there's good reason to. It's going to make it a little bit harder for me to trust higher float stocks in the future. And 8 million shares, to some people, that isn't a high float at all. But there's a lot of stocks that are easy to borrow with an 8 million share float. And if you think about it, right, compared to a 1 million share float, an 8 million share float needs, theoretically 8 times the volume to make as big of a move as a 1 million share float does. Because the float is 8 times higher. So it needs 8 times more volume to be able to make the same move. The news catalyst was actually also pretty good, if I remember correctly. It was a contract with the military. And it had AI in the name too, because that's been a theme recently. I still think that it was the right decision to trade that stock. I probably would have been green on it if I had filled lower. Because I missed over $1 a share just in fills. The first trade, I believe I filled 50 cents higher, and the second trade, I filled like 50 cents higher than I intended. So they ended up being losses instead of wins. Even despite my fills, I believed that that stock had the potential to move at least $1 a share on the breakouts, but it didn't. So it is what it is. Today we're just sitting tight, waiting for something to pop up with news that meets our criteria and looks good. One thing I will note that I've been thinking about also is that yesterday I only traded 50 shares, which is quarter size. Quarter size position for me. Actually, I only traded 10 shares because it was above $10, which is quarter size for a price above of $10 for me. Max size is 40 shares. But I was thinking of sizing according to the opportunity as well. I maintained quarter position size for that stock because I was still wary of it being a higher price stock and a higher float. But if I see something that pops up with news that looks good, that's below 3 million shares, is up at least 50% on the day, looks good on the 10-second, looks good on the daily. Even if I haven't taken any trades to build a cushion, I might try to take the opportunity and maybe not size up with full size right away. Maybe I would start with half size and add as it starts working. 2 entries, 2 exits at most. Because I was thinking about how over the course of the past month and a half, I've never really been able to size up unless there's something really good that gives us multiple opportunities. And what Ross has been doing is that I believe he sizes up according to the opportunity as well. When he sees something that's really good, he gets aggressive on it, even if he hasn't taken any trades for the day. It might be that he takes one trade to get green, and then as soon as he's green on it, then it starts working, then he puts his foot on the gas. That is precisely what cooked him yesterday. However, he was up $20,000 on ODYS. He took that first trade on ODYS that I didn't on the first 1 minute pullback. I didn't like how it was formed by a shooting star and a long bodied doji, but it did look good on the 10-second. I'll admit that. Maybe I missed a trade there. He made 20,000 on that, and then as he continued to trade where I traded, he kind of got smoked on his very last trade, where he got aggressive on it, and it just completely rejected on him. There are drawbacks to being aggressive if you're wrong, and it can be a bit more difficult to be aggressive if you're new. But if I'm really confident about something, I may try to size up on it. In fact, one of the things that he recommends for beginners is to trade with full size on every trade, not worry about scaling at all. If he says that, well, there's a few different phases. There's 1 entry, 1 exit. There's 1 entry, 2 exits, 2 entry, 2 exits, and then there's actual like scaling in and out of the position, being in that flow state. There might have been one more, but I don't remember what it is right now. But Ross, in his video that I watched recently, recommended for 1 entry, 1 exit, just to trade with your full size. When you see a good opportunity, you take 1 trade per day, you trade with full size, you're in, you're out, lock up that 20 cents. Or 1 entry, 2 exits, lock up the profit and then wait for an exit indicator to see how far it's going to move. Scaling was, 2 entries, 2 exits, or completely scaling in and out, where you take a starter position and you add to the position as it starts working. They're a little bit more complex. But even then, I think for 2 entries, 2 exits, he would say start with a half size position and then scale in full. Because our account size isn't very big. With a small $2,000 account, like we're only trading with 100 to 200 shares if you're not risking your entire account size like he does when he does his small account challenges. If he's, like, for example, a $5 stock, he's probably taking a 400 share position or more with leverage, because he's confident that he can choose the right stocks to be aggressive on and trade. And the money it doesn't matter as much to him. If he blows up that account, it's not as significant to him. But for the rest of us peonies, trading with your entire account size on every trade it can be a bit more risk than most people are willing to stomach. Let's say I make a mistake trading 400 shares on a $5 stock and I lose 50 cents a share. That's a $200 loss. There's not very many people that can stomach seeing their account decrease by 10% in a single trade. Could cause them to spiral emotionally, make them feel down for the rest of the day. And what's worse is if your accuracy is not that great, you could potentially do that a few trades in a row and have your account be down maybe 20 or 30% through no fault of your own, although some people may think that it would be your fault, especially if you're taking 50-cent loss per trade and you probably had the opportunity to exit sooner. But there is the probability of random chance involved in every single trade, no matter how correct you think you are or how much control you think you have. We don't have all the information. Stock may look really good, but there might be somebody in a hedge fund office with their hand ready on the sell button as soon as it hits a certain price. We don't have that information. You always have to be ready for the trade to turn against you. And what I was getting at is that I'm not willing to stake my entire account size on a single trade right now. My maximum risk is 2% on stocks between $2 and $9. And for a stock above $10, it's 1% because the swings are bigger. But if you think about it, I mean, 200 shares, if I lose 20 cents on average per trade, or 20 cents maximum, maybe not average, because I want to maintain that breakout or bailout mentality, getting out 5 or 10 cents. But if you lose 20 cents, that's $40 on 200 shares. If I have a 75% accuracy whenever I see a stock that pops up, or maybe even 80% accuracy, if I see a stock that pops up with maybe a less than a 1 million share float or a 1 million share float in my bread and butter price range with a catalyst that looks good up 50% on the day, it's more than likely that my accuracy is going to be pretty high, in which case jumping into a stock, 8 times out of 10 is going to net me a significant amount of profit. It can be 50 cents, $1 share or more. But the 1 or 2 times that I'm incorrect, it will feel pretty crappy. Potentially losing $20, or if I'm not careful, even $50 on 200 shares. Oh, sorry, not $50, 50 cents on 200 shares. It's $100. That'll feel crappy. But hopefully, you get a few wins before you get the loss. 3 wins of 50 cents on 200 shares, $300. 1 loss, 20 cents, 200 shares, $40. You're not profitable. So as long as you can follow your process and not think about the outcome, then it should pay to size up on better opportunities and take advantage of the opportunities where you can. It is a bit more difficult for a beginner to do because you're still trying to figure out whether the opportunity is good or not. But that is one of the things I've been thinking about recently. At what stage do I implement that? Right now, I'm just following the quarter size up rule, where I don't size up until I am $10 in the green, 20 cents on 50 shares, 50 shares being quarter size. Once I'm $10 in the green and I have a bit of a cushion, then I can size up. But in this cold market, one opportunity per day, when are you ever going to size up? Maybe it's better that I don't and I just stay at quarter share size during the entire cold market until it gets hot again. Maybe that is the best course of action. But everyone would like to make a little bit more money, even in a cold market where you reasonably can. I think the goal for right now, though, is keep my head above water here, So 8:30 came and gone. First, not 8:30, 7:30. And nothing popped up. So I've just been rambling for a little bit. There's not much to do right now. There's nothing to watch. Hardest part about a cold market. LIH moving a little bit on continuation here from a few days ago. That level at 460, then we got that previous high at 560. It is a low float. The problem is that it doesn't have fresh news. So its relative volume right now is less than 1. I mean, if it breaks over 460, it might have room up to 550. It just doesn't have enough attention right now. And we're also rejecting. Wen has been moving a bit, but the 200 moving average is right up at 860. And it also is a higher float. Nothing moving. You guys have ever been out fishing here up in the north? Probably don't see it very often in the ocean, but in the lakes here, there are some days, especially some nights, but some days where you're out on the boat, there's no wind, nothing moving, got your line in the water, there's nothing biting. All the fish are in the nooks and crannies to avoid the sun. Today is like that. Nothing moving, everything's still. Yeah, fishing is relaxing. My dad loves fishing. Fishing is his favorite hobby. When I was young, my dad took me out, taught me everything about fishing, how to tie the lines, how to drive the boat, where the fish are. I live in Canada, so we mainly fish for pickerel. We don't like pike. Pickerel, if you're American, pickerel would be walleye. Americans call it walleye, but we call it pickerel. Sometimes perch. Pike are a bit more bony and they don't taste as good. Bass are also a little bit harder to fillet. There's a partnership headline on this stock here. 200 is up at 330. Hmm. I mean, this is a lower price with a bit of a higher float. I like the headline, but it's only up 20% right now. An 8 million share float. If you look at the daily chart, we also have a nearby daily level here, 227. The stock doesn't seem to trade with much range either. I don't know. I don't think this is the one. I guess I was wrong. It worked from 230 up to 250, 260. It did end up working from the break of 230 there up to 260, but it doesn't look like it's going to give us any more than that. So I didn't take that trade because I'm being very picky, which is a good thing. It has a bit of a higher float, a bit cheaper in the $2 range. So I didn't expect it to move 50 cents on that breakout. I would have expected it to move maybe 30 cents at most up to 250, or 20 cents, sorry. 20 cents up to 250. 20 cents enough for me to take the risk on a higher float and a lower price? Probably not. I didn't expect it to move all the way up to 280. And now it's just probably going to sell off because of that high volume rejection up at 280. We left some money on the table here. But that's fine. We're maintaining discipline. We're not going to trade anything until it looks really good. I didn't check to see in the community chat. My Trade Zero isn't a very good broker to tell me whether or not the stock is easy to borrow or not. Usually, the reason why I'm more wary of stocks above 6 million shares is because often easy to borrow. I didn't check. And Ross is away from his computer right now, so I assumed that it would probably be easy to borrow as well. Nobody said anything in the community chat about whether it's easy to borrow or not. Most likely is. Ross will probably come back and look at it. He hasn't already. I see he has it open, but he just left it alone. I don't know. I think I made the right decision not to touch it back here, even though it moved. Even though it moved 50 cents. Hindsight is 2020. This were Fission, this would be a small biter. It would be a throwback. I'm not keeping this one. We have 8 a.m. news in 1 minute. See if we get anything better than this. We'll wait for news at 8 and 8:30. If there's nothing that meets our criteria, then I don't mind taking no trades. Better than a second red day. MobiX has room up to 550. Wins a Boeing order. One's only up 20%. This one also has a 9 million share float. I don't think I'm interested in MOBX either. Same problem as the other one. Higher float, cheaper price, down at 2. I was kind of selling off. I'll just clarify that in a hot market, I'm willing to trade stocks under 10 million shares. Like I've said before, in order for me to trade a higher float, it needs corresponding amount of volume. This would need 9 times the volume as a 1 million share float to make the same move. And in a cold market, we just don't have that volume. That's why I tighten my stock selection, generally speaking, to stocks under 5 million shares. Anything above 6 million shares that's easy to borrow has a high likelihood of not working because it just doesn't have the volume unless the news catalyst is really good. It has a higher likelihood of failing. I'm not saying all of them will fail, but I feel like a good majority of them, or maybe it could even be 50-50, right? You don't want a 50-50 accuracy. You want a higher accuracy than 50-50 in the strategy that I'm trading, in my opinion. So leaving this one alone too. Now it's kind of selling off. CNCK, it popped up there. And then it sold off. Didn't give us any more opportunities. It is trying to crawl back up here, but I'm not interested in it unless it can crawl back up to the highs and prove its strength with a significant amount of volume. But until then, we're still sitting tight and waiting. Hmm. So now we're waiting for 8:15. So just for giggles, let's see where the other stocks are at right now. EZFD has been selling off throughout the day. Our top leading gainer, 21 million shares. PDIC has just been going sideways. Second leading gainer. HTCO, third leading gainer, going sideways. CNCK is curling up right now. Just took the spot for their third leading gainer. He's about to cross over. There's just nothing interesting right now, so. CNCK has some increasing volume now. But like I said, I don't think I'm interested in it. I think it's strong enough. People might trade this as the first pullback after a fresh reclaim of VWAP. A little bit sketchy though. First candle to make a new high would be 245, looking for the breakthrough 250. Target would be like 260. You have two levels of resistance here, the half dollar, whole dollar, and you have 256. And then you have, your target being 260, but ideally you would want more than just 15 cents. The stock is a grinder. It's very stacked. A bit in the ask right now. So it could work. Just not something that I'm going to trade. Our PGL is popping up, but it's a penny stock. I don't see any news on it, so as of right now, this would be a dead cat bounce off the low after selling off on the 8th. I'm not interested in this. Too cheap. Kind of as I expected here, MACD crossed over now. It first candle to make a new high. It didn't break through that first level of resistance at 250. You're looking at not even 5 cents of profit. So nothing interesting in 8:15. Now we're waiting for 8:30. Walk is popping up a little bit. Walk is a stock that had a big move after hours here. I saw that Candyman got a nice trade on this. It moved from, if you count the lows during regular hours, it moved from 14 cents up to 6.75. What a move. How much is that? 3,000%. That's insane. Probably the largest percentage gain I've ever seen. Just imagine if down here, say I bought full size with my $2,000 account. At its low, I mean, I could have bought 20, so multiply my account times 5. You could buy 10,000 shares of this. You buy 10,000 shares of this, and it goes up 650. Make 65,000 bucks. That's crazy. But anyway, I'm not interested in trading it here. Not after it came all the way back down. So that is very impressive. I wonder if that's going to create more interest in after hours. Sometimes we've been having themes where stocks make big moves after hours. Unfortunately, I can't be around for after hours trading because I'm working. Most of the time. This stock is it's what I would call a windfall if you were to happen to it. If you were to happen into it and get a ton amount of money, some people do. It's definitely not something to count on. It would be nice to earn $60,000 in a single trade. With just a $2,000 account size. That would be nice. That's something you see every day. Oh, it's 7 minutes to 8:30. I suppose walk is the exact reason why people love gambling on penny stocks so much. Every penny stock has the possibility of going up 10, 20, 30 points in their mind, and they could instantly become rich. Kind of like how at the casinos, there are some slots that have very low RTP, but they have huge max wins. You keep dumping money into it, dumping money into it. And eventually, you gamble long enough, you could lose a ton of money. You might never get a big win. Some of them do. So HIND popped up on the scans there for a brief second, and it's already selling off. CNCK making another attempt. Once again, though, I mean, this isn't the stock to trade unless it suddenly spikes up over 280. This is just a bit too choppy. Too many topping tails. That latest spike in volume was the highest volume of the day. But It's 8:30 in 1 minute. So let's hope that we get something that holds up in my criteria. I believe yesterday it was Otis that popped up at 8:30. So the highest likelihood of the day for something to pop up with news is 8:30. 8 and 8:30 usually. See if we get anything here. Wow. Jess says in the Warrior Trading community chat, the calm before the storm. I certainly hope so. We're having no news headlines releasing. So far, there's only been two here at 8:30. So what are we doing right now? Jess made a good comment in the chat. He said, make sure not to get caught up in overtrading in slow markets because you'll be too burnt out to trade in the hot market. I mean, that's pretty much exactly right. If this were the me of the past, I almost certainly would have traded CNCK. Probably lost money on it. Probably would have traded a few of the stocks that popped up and then instantly failed. And I would have been frustrated today because everything that popped up has eventually either gone sideways or immediately failed. We're surviving right now. Survive till you thrive. We're not trading anything unless it looks good. It meets our criteria. IPWR popping up for a second there, but it's only up 1% on the day. It's just breaking this daily level, and it's also 10 million share float. Has no volume. Oh, I guess I'm back to reading on my phone until 9 a.m. or 8:45 if there's anything at 8:45. Hmm. Good thing I have my camera running, or you guys would even wonder if there's anyone at the desk. What is this? FABC. I don't see news on FABC. Really not reacting like there is. Just 9,000 shares, 3,000 shares. Very light on volume. It was just popping up on the high of day scanner. The dog beside me is upside down in his bed. He's all comfy. Although I was marking levels on this, to be honest, I'm not very interested in it. I'm just bored. We're still at the bottom of this move from April 28th. And we're below the 200 moving average. There's too many, there's going to be bag holders on this. There's too many levels of resistance. So I'm not interested in this, even though it's our third leading gainer right now. accidentally startled my dog by moving my chair a little bit. So 8:45 coming and going, but no news. It has been a bit disappointing. I really doubt we're gonna get news at 9. Most of the time, if it's this quiet all day, you don't usually get news at 9. It's still a possibility, but it would have to be very good for me to want to trade it at 9 or 9:15, because at this point, the day is already almost done. Make a mistake and go in the red, you have no opportunity to recover it. But can't do anything about it other than lower my quality standard to take trades. But we're not going to do that. So the bad part about sitting around like this is that when we finally do get an opportunity, after sitting around for maybe a day or two and kind of not trading anything because there's nothing that pops up that looks good, I'll feel like I'm rusty. Like I haven't taken any trades in a while. I'll inherently be more cautious. It'll be difficult to take full advantage of any opportunity that pops up. Kind of like waking up from a sleep. You're groggy for the first 30 minutes or hour, however long after you just wake up from a sleep because you're just in that hibernation mode. So when the market heats up again, probably everybody's going to need time to adjust. And part of the reason why this market has been difficult is because, yeah, it has been cold most of the time. So it's been a bit touch and go with whenever we do get an opportunity like Audis yesterday that ends up popping up 100% that we don't expect it. The feed here is a bit of a garbage stock. It's a medical supplies stock, but it's a cheaper stock. Has a bit of a history of selling off. Pretty much all it's done, except for this top back here, is sell off, right? Since the beginning of time, basically. IPO'd and then sold off, gap downs, continued selling off, selling off, selling off. This is a stock that has a history of popping and dropping and just going lower. So, I mean, some people will jump on this, but it's not going to be me. 6 minutes to 9 a.m. The stock has an additional level of resistance up at 270 as well. 267. Ross just finished talking on his stream about the move that Walk put in later in the evening during regular market hours, and whether it's the right decision to stay at your computer all day to try and take advantage of those opportunities, or whether to just walk away and leave money on the table. I believe for myself that if I had all the time to trade in the world, didn't have a regular job, and trading and whatever other side passive source of sources of income I have were my job, I still believe that I would stick around until 10 a.m. and then I might come back for after hours from just 3:30 until 4:30. I probably wouldn't trade all day during regular market hours. You know, one of the reasons why a lot of people trade is because you can trade it at your own convenience. You don't have to sit around and work from 9 to 5 all day, every day. In fact, you'd be working even more than that. You'd probably be working if you stayed around for the entire market, assuming you didn't trade it starting at 4 a.m., say you started 7 a.m. and you wanted to stay around until market close, you'd be trading from 7 a.m. to 8 p.m., right? Just to make sure that you don't miss any opportunities. I don't think anybody wants to stay around 13 hours a day to trade. So where do you draw the line? Question. And Candyman was talking about that maybe a week or two ago, about how he feels like he's missing out if he's not at his computer all the time. And he struggles to walk away because he feels like he's leaving money on the table. He wants to make money back. However, I'm of the opinion that there are certain times of the day where you're more likely to lose money than you are to make money. And it's not very often that you see big moves like Walk in the middle of the day. I'd probably sit down at the times of the day that are most likely to put in big moves, and that would, for now, that would be from 7 a.m. up until market open, until from 9:30 to 10. Would walk away for the rest of the day, come back at 3:30 and stay just for after hours open until 4:30. Nothing's moving by 4:30, then shut it down. Enjoy the rest of your day. And this is also what a lot of prop firms do as well. Prop firms, they only trade the first 30 minutes, maybe hour of the market open. They might come back at lunch, or like 1 p.m., trade a little bit in that segment, and they leave, and they come back, trade at like, sit down at 3:30 waiting for after hours open, and then they finish the day. After trading a little bit. At a certain point, there are diminishing returns to sitting around and trading all day and watching charts all day. You're going to get tired out. You're going to get mentally exhausted. You're going to get decision fatigued, constantly looking at charts, constantly looking at stuff moving. You're going to get emotionally fatigued. You take a loss early on in the day. Me sitting here for 2 hours, for example, I took a loss yesterday. I want to make it back. Everyone would want to make it back. So, I want to take a trade. Of course I do. But there's no opportunities. Now, imagine if I was sitting here for 13 hours, not taking a trade for 13 hours because there's no opportunities. It would be a lot more difficult for me to keep my discipline if I were to sit here for 13 hours and not take a trade on something that's sub quality, because my patience would eventually run thin. I am of the opinion that you should trade at the best times of the day that fit your strategy, where you make the most money. Maybe at first, if you're back testing, you could trade all times of the day and you could try and you could look at the times of the day that you make the most money and then cut back. I know that there's a lot of AI tools out there now that can even break down profitability by day, by hour. And you can see what times you make the most money, what times you start to fall off or overtrade. And you can cut those out. And even if a big move happens when you're not trading, then you don't need to feel regret, because you know that probably, in all probability, over a large sample size of time, you typically don't make as much money during that time frame. Ross says all the time, you don't think about where a taxi goes after you get out. But traders think about what they missed even after they shut down the charts. But if you're confident in the time frames that you normally trade, that those are the time frames that you make the most money, then you can feel comfortable walking away and not thinking about trading, not having to deal with decision fatigue, discipline issues when you're sitting there for 13 hours, all that stuff. Ross was also mentioning how you might also have a bit less of an edge during regular hours because you're competing with algorithms, competing with people with stop losses, you're dealing with halts, you're dealing with a huge amount of volume on some of these stocks that are putting in big moves. Like Walk on the 5-minute had 4 million shares of volume, 5 million shares of volume, 3 million, 4 million, and all these 5-minute candles. You're dealing with a ton of volume. Level 2 will be more difficult to read. Time and sales will be more difficult to read. If you stick around all day and you're trading some of these stocks with higher volume and you're already decision fatigued, then it's going to be more difficult for you to maintain your edge. That's just my opinion. Even though I have a job and I can't continue trading all day, I'm pretty confident in the back testing that Ross has done from all his years of trading, that he makes the most money from 7 to 10. I have tried trading during regular hours before, and it is a different ball game. I may not, if I ever allow trading to become my main source of income, and I ever quit my job, I may not end up trading after hours. It would probably be more of an experiment at first. I would probably have to trade with a simulator and back test after hours, see if it's similar to pre-market. I haven't done enough trading after hours to say for sure. But I probably would try for a while to see. I know that a lot of moves after hours are on much lighter volume than they are pre-market, unless it's big news. But that would be something to test. I definitely wouldn't trade all day though. I would trade 7 to 10, take a break, come back at 3:30, trade for an hour, and then leave again for the rest of the day. That'd probably be the extent of my trading. So I'll stick around until 9:18 or so to see if there's any news at 9:15. But if there's not, then I'm not gonna stick around and trade at market open. There's nothing interesting today. Today's too quiet. CNCK is floated too high. It's only up 36%. $2 stock. I don't think I would want to trade this market open, especially if it's selling off below VWAP right now and it's not holding up. The other top 5 leading gainers, 2 of them are higher floats. BZFD is a 21 million share float. BSTS is a 111 million share float. Not interested in those. TDIC is cheaper. And TDIC, it is curling back up here, but it needs to get all the way back up to 261 for me to be interested in it. Technically, if it breaks 190 or $2, it could be a break of the pre-market pivot, and it could see a bit of a move. But these $1 stocks have thin halt bands, and TDIC is kind of a continuation from previous days. This reverse split back here, where it made some previous moves. So it's not an optimal setup to trade when I don't have any cushion on the day. Things have been slow. And HTCO is the last one. I think, like I said, this is a dead cat bounce. So most of them, they would be B quality setups at the open. Not really something too interesting to be trading. When you don't have any cushion. Because if you lose on it, then I'm going to have 2 lost days in a row from yesterday. So what I would rather do if we don't have any news here at 9:15 is just call it a no trade day, come back tomorrow, wait for something that has better news in the float range and price range that I typically do well in. Rather than make a mistake, go red again, and then, spiral. Not the way I want to start the small account challenge. It's a difficult time to start a small account challenge in this market, but I chose this for myself. So, the best thing I can do, keep my head above water, and that's been the goal since the beginning. Da, 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 da. DTST had 8:57 news, but looks like nobody's even touching it. Doesn't have any volume. KOPN has some volume, but it's 157 million shares. Well, not maybe not volume, but moving up. Been on uptrend for a while now. It's a very old stock. UYL with 9:17 a.m. news, but the $300 stock. If I were to trade this, I would have to take 5 shares at a time. No, thank you. Doesn't have any volume anyways. All right. I don't see anything. I think I'm going to call it here. We'll call this a successful day of holding discipline. Nothing interesting at the open. CNCK is below VWAP now. So, I wouldn't even be interested in trading this at the open at all. So, I'll be back at it tomorrow. I'm going to shut it down. Thanks to everyone who stopped by today, watched the stream. I'll be back at it 7 a.m. Eastern time, as per usual. Hopefully we get some Momo tomorrow, and this is just the calm before the storm, as Jess said. But until then, take care, stay green. See you next time. Peace.